Hello everyone. In this video we would be talking about how to use the Keltner channels. So Keltner channels is a way to know about the overbought and oversold levels, and it can be used as a form of support and resistance to take entries and exit, with others form of oscillators and price filtering. Keltner channels can be used effectively for taking positions. So I will select the Keltner channel. So as you see, the lines have been drawn on the chart. So this is the upper band, this is the central value, and this is the lower band. So the central value is basically the smooth version of the prices, so it can be helpful in predicting the price movement in many ways, like the direction of the central value. Like if we see the direction of the central value here, it's pointing upwards, so it actually shows a trend formation. So if you want to predict have some basic idea about get some basic idea about the trend, you look towards the direction of the central value, and we need to tune this Keltner channel to our trading need. So what our first aim is to contain the price movement, the upper and the lower price movement, into the upper band and the lower band. So length is basically here the periods, the number of periods I am considering for the observation and analysis. So currently I would be using 14 period analysis. Okay, so now this is the multiplier. So this is basically how you we are actually setting up the upper band and the lower band by visual inspection. So I would use a multiplier of 3. So just to check if it's working. Okay, the prices are somehow contained in the band. If you see, I think if it would have been a little less, so it would have worked out. So I would go with 2.8, I guess, if they allow that. Okay, so it works here, and now we would select this. Now the analysis part here is, the first thing is, there are two types of strategies that you can look in Keltner channels. So that is, the first is the reversal strategy, and the second is breakout strategy. So most of the traders in Keltner channel go for the reversal strategy. So first basic thing is, if the prices touches the upper band or the lower band, which is actually the overbought and the oversold signals, and it touches it, so that would be actually a sell signal if it is with an upper band, and if it is the lower band. So signal doesn't mean an entry, so it just signals, okay, just there is going to be some sort of reversal. So to be sure with the Keltner channel, you will need some price filtering, like Fibonacci retracements and some oscillator indicator. So now as we see, the price has been reflecting or reversing whenever it touches the lower band or the upper band. By visual this is by visual inspection we are seeing this. So that's how it's been working. And the second most important thing is, these bands also works as a sort of support and resistance. So if you would through visual inspection you look out, so you will find that, okay, these lower band, like here in the downtrend, has been working as support, and here in the uptrend it has been acting as a resistance. So This is quite helpful in like taking entries and knowing about the downtrends and the uptrends and about the reversals that are like about to happen. So as we are seeing, like this theory is followed everywhere. So if the prices are near to the central value, like here we see the prices, the central value is acting as a support here. So as soon as the price reaches the central value, we take a short position here. But we, like here we see, okay, the prices are trending along the central value, so this central value is acting as a strong support here, so we can take a position around let's say this point, which is 478, and since the trend is a quite a strong trend, we can go until 511. This is a one-day chart for Tata Motors. So the same thing if we analyze here. Okay, see, the prices here came down from the central value, and we are okay, quite sure, okay, now it has breached the support level of the central value, and we take a short position here. So we short here and the prices fell, so the lower band acts as a sort of a support. So it's though not advised to only use Keltner channels, like obviously some practice is needed up to some extent, but if this is used enormous with the Fibonacci retracements, then it would be really helpful to use it. I mean, let's say let's do a simple analysis here. I will add a Fibonacci retracement to take a position. So I'm going to draw a line here from the highest peak to the lowest trough. I'll connect it back. Okay. And I guess if we can bring down this opacity of this, so okay, so now we see the Fibonacci levels here, all the ratios. Now let's say my price is here, which is at 545, and it reaches the 100% level. So I'm going to draw a horizontal line just to like make it more like visually visible, so that like I'm not confused while taking positions here. So I'm just going to draw overlays over it. For me, till now, I have seen Fibonacci retracement as the best form of taking entry and exit. I mean, it's quite accurate in its appeal as compared to the normal support and resistance analysis. So we now have drawn this, connected this trough to this this peak to the trough. Okay, now we see, okay, the prices have moved to this direction. The price come down to the zero level, and I am somewhere here near to this place. So what I do now is, since some sort of reversal can also happen here, like we are seeing here. So as soon as the price breaches the central value, it comes up. I somewhat become sure, okay, now from here my prices can go up. So what I do is I take a long position here. So I will just mark that line with some green line at the place where it breaches, and mark it green, and put a stop loss just below the central value band, which is the best. I mean, trading with very tight stop loss is a not good thing. So okay, just but it should be somewhere below the central value. And now I wait, so that when the price reaches the 20.23 ratio level, so I can expect, okay, some sort of reversal can take place, but the value is still above the central value and the direction is also towards the upside, which actually means, okay, the prices are in an uptrend. So you should know, like, if the prices, if it's in a strong uptrend, the prices are expected to move to the 50% levels. So keeping that in mind, we just stay and wait for some time, and we see the prices reaching to the 50% level, and here there is resistive action being offered from the 50% line. So like a safe trader, we exit here at 484 position, so booking a profit of almost 40 something. So that's how, like, you trade in this. Now let's find some other example here. So actually I've been talking about only the reversal strategies in the Keltner channel, but what if the price reaches the upper band and the lower band? So in that case, if the price reaches the lower band or some upper band, we take the long position for the upper band and the short position for the lower band. So we will do some inspection at other price, some example from the other price level. Okay, let's go for this price. So what is happening here, my prices are like it's getting reversed here. So it's the 0.38 ratio level, and it touches and comes back and starts to form a downtrend here. So I wait for some time, and from here the prices start to breach. So now what happens is, at this price, I mean at the 0.230 Fibonacci level, I short here, I take a short position here, which I will mark with the green line, okay, and put a stop loss just above the band. So this is my stop loss position. Okay, so this is our stop loss position, and I going from by the general philosophy of the Fibonacci retracement, I put my target for 417. But in addition to that, I also wait for the prices to come above the central value. So I actually, if in this case, I would, what I have done is, I will actually have shorted let's say twice the number of shares I would have what for sold for this levels. So let's say if I shorted 200 shares of Tata Motors at 450, so actually I would have bought 100 shares and waited for this price to actually go up above the central value. So now we see a downtrend happening, a candle happening here, and I mean, we can take one position here also when the prices breaches the lower Keltner band level, and now we wait for, like, the prices to come to the central value band. So like safe traders can exit their positions as soon as this price comes inside the upper band, and we safely remove our position as soon as the price breaches the central value level. So I would book my profit at 392 in this case. So this is the other example we just saw, and there are sometimes false breakouts also. Like in this case here, what we seeing is like a breach has happened, but the next time the prices came down, and if we would have placed the stop loss just below the central value, that stop loss would have been hit. So we would need some more price filtering at this point which I'm going to consider in the other videos. But if we go by the general philosophy of like what I just told about this, so if we are like normally taking long positions or short positions about the central value in anomaly to the Fibonacci retracements, then this is going to work out quite a lot. And hope you might have understood how this is actually acting as an overbought and oversold levels, and how it's acting as a support and a resistance level. So, and how it actually shows the trend formation, so which is actually a quite confusing thing. Like usually when I'm talking to the clients, they don't know about what's the trend. So this is one of the best ways to know about the trend, like what's actually the current trend of the prices are. So hope you might have learned from this video a lot, how to use the Keltner channels, how to take the entry and exit, how to place the stop loss on the channel and the entry and exit. So hope this helped a lot. We would be discussing other important stuff in other videos. Till then, bye bye.